Let's just begin with that stunning unemployment figure, a 3 handle, Kevin. I think a lot of people trying to wonder whether we're at full employment or not. What's the administration's view?
Well, I think that getting down to 3.9 is really astonishing, because what it means is that we now have the longest labor expansion, continuous labor expansion on record. And I think that a lot of the reason why that's happened is that we came in and we deregulated at the beginning of last year, and then we had this big tax cut. And so a lot of times recoveries start to run out of steam at the end, but we've just put more steam in right at the end. And one metric of that, by the way, that I think is most interesting is that since the president was elected, 900,000 people have re-entered the labor force and gotten a job. And so we've been able to continue to grow the economy at a very healthy pace because people are coming back. People who were discouraged because they couldn't find a job in President Obama's economy have been reconnected to society, and that's really good news. And that's really the smoothing through the ups and downs. The headline of the jobs report, I think, is the really surprising increase in labor force participation over the last year and a half.
Kevin, for a lot of economists on the street, they look at the headline numbers and they see an economy, a labour market that is at full employment, a labour market that's really tight, and therefore surely inflation pressure must be coming out the other end. And Kevin, the administration, led by yourself really looking for a supply-side response. Why are you so convinced we'll get that supply-side response? What do you see in the data in Q1 that gives you that optimism?
Sure, we see it in the data already. So both in Q4, there was a big spike in capital spending, and that was in part because people wanted to get some stuff in before year end because of the tax cuts, because they could expense it back to September at a higher rate if they spent it last year. And so we were a little worried that capital spending might level off in the first quarter, but it went up from there. And so the capital spending boom that we said would happen is happening. We're also seeing it in wages. We now have more than 6 million people that have gotten raises that their employers said were because of the tax cuts. And if you look at the employment cost index, then over the last 3 months, it increased 1%. If we had another 3 quarters like that, that'd be 4% for the year, and that's the highest rate we've seen at least since 2006. Going before 2006, it's hard to make comparisons because they changed the data a little bit.
Well, Kevin, some people are pointing out...
There's a lot of good news in the labor market right now.
There is, and some people pointing out to me, though, over the last month or so, and the last several months, that there are some signs of some bottlenecks appearing. Labour supply shortages, as well as, let's say, backlogs at factories in terms of orders and whether they can really get things out. Supply-side constraints. Do you not see that, Kevin?
Yeah, that's a normal thing in the cycle, that when the unemployment rate gets low, then what'll happen will be it'll be hard to find workers. And at that point, what firms tend to do is invest heavily in capital in order to increase the productivity of the workers they have. And so if you think about it, the tax cut was timed perfectly, because right at the moment when firms need to invest in capital to make their own workers more productive because it's getting a little bit harder to find people, then we gave them a tax cut that stimulated capital spending. And so I think that's why you've seen everybody, the IMF, even the CBO, they've jacked their forecasts up for this year to around 3%, which is what we said last fall would happen after the tax cut, right? And it's happening because the capital spending boom, it's in the data. The wage growth, that's in the data too. And the reason we've been able to continue to grow is there were those 900,000 people that had sort of, that everybody gave up on before President Trump was elected, who've been reconnected to society and found a job.
So, Kevin, where the private forecasters aren't with you, it's not 2018. They're pretty much in line with you. You guys are looking for something with a 3 handle. The median estimate in our Bloomberg survey, the high 2s. It's 2019, it's 2020. Most of the street, the consensus, see the economy rolling over. Not drastically, not dramatically, but certainly the trend's going to go the other way. Why do you think that's not the case? And my second point, really, on the issue of this being late cycle or not, a lot of people say this isn't the right time to do a fiscal stimulus because of exactly what's about to happen. The economy is set to go into a bit of a downturn.
Yeah, really good question. So they actually tie together neatly. So the point is that late in the cycle, if you were to pass a big demand stimulus, like the Cash for Clunkers program under President Obama, then that big demand stimulus could heat up the economy and cause inflation to get out of control. But if you have a supply-side stimulus, then you increase supply, and an increase in supply can even put downward pressure on prices. And so if you want a sustained recovery late in the cycle, what you need is a capital spending boom to push up supply and keep the upward pressure on prices low. And that's exactly what we're seeing in the data.
And there's a real debate as to whether that's going to continue. And Kevin, outside of that debate, there's a debate about the contribution of trade to overall GDP. I think for some economists, by definition, if we get some fiscal stimulus, demand's going to go up, and therefore the trade deficit is naturally going to widen. And you're going to get a negative contribution from trade. And that's something you guys don't want. So can you reconcile the trade effort to get the trade deficit down with a GDP effort to get growth up to 3% and beyond?
Oh, sure. You know, and President Trump and the team are all on the same page on this. And if you look at the economic report of the president, which was written by a guy who some have called a globalist, right, that it very clearly enunciates the president's agenda, which is to just get reciprocity, to make it so that countries around the world lower their tariffs to the U.S. level. And so that, you know, China, there's talks over there right now. They have a 25% tariff on our autos. We have a 2.5% tariff on their autos. If we can get reciprocity in our trade deals, if we can improve them, then over time, U.S. exports should skyrocket, and that's really the objective of our trade policy.
So, Kevin, I know
and it's good for us, and it's good for them too, because removing the trade barriers around the world will increase global growth and welfare.
I know the team is on the way back from Beijing, and there's only so much you can say about the results of the negotiations. We've seen here at Bloomberg, in a copy of the document that you guys have presented to Beijing, of the demands on the U.S. side, and they've already been talked about in quite a detailed way. What I'm trying to gauge from the administration, we've had great transparency on what you want. I'm trying to understand still the time frame, the time horizon. There's a credible threat with proposed tariffs at the other end. How much longer do we have to see negotiations take place for before that credible threat is actually imposed and becomes policy?
You know, I have nothing to say about timing right now. You know, the team's flying back, and before the team left, they communicated that decisions about what happens next would be made in Washington, not in Beijing. And I think that that's out of course, respect for the Constitution. But I'm sure that everybody wants to come back and get down in a room with everybody who's back here in Washington and talk it through. And so I'm sure there'll be more news for you guys soon.
And Kevin, and I'm sure you'll be on screen, or someone from the delegation, perhaps Larry Kudlow, will come on the program and talk about the update, and I'd really look forward to that. I'm
always at your disposal. My office is right over there.
Well, I'd love that, Kevin, as well. I guess my final question to you is whether the trade issue is separate from the foreign policy effort, because the president has blended the two, and quite clearly pressure on China is generating some foreign policy results. So can we blend the two issues together? Do you take a softer stance on China on trade because they're generating results on the foreign policy side for you?
Right. Well, you know, I'm not a foreign policy expert. I'm an economist, but there is a foreign policy angle to everything. And if you look at the reports, the economic report of the president that focused on China, you know, there were lots of episodes of China stealing our intellectual property and, you know, not really respecting the rule of law internationally. And I guess that's an economic issue and a foreign policy issue. And that's the kind of thing that's on the table and that I'm sure that our team has talked about with them.